You expect a deal to be had, I think your date is March 1st? By March 1st?
Well, the 90 days will run out by March 1st.
Right.
You'll start hearing the outlines of the deal as we approach March 1st. But the 90 days will not run out, and you'll see tariffs right now. Unless something big intervenes, you're going to have a deal on March 1st. You will have it.
And what will that deal entail? What does that look like to you?
Frighteningly little. I mean, you've already had the agreement on Chinese hiking imports. They're going to get the number up sufficiently, and soybeans and LNG and all that stuff are flowing again. The other thing's IP. So there's when you're getting a readout from what the discussions are, it sounds like they're covering 9 different topics and trying to check. No, they're focusing on one thing, and that's IP theft. And so if they can get a framework from the Chinese that's sufficient for them to be able to politically defend a deal with China on IP, then there will be a deal on March 1st.
If you are an automaker, if you're Mary Barra, what do you think is going to happen to the auto sector in all of this?
Well, you had tariffs at 15% before you had the trade war. You'll probably go back to 15%. I don't think that they're going to do much more. There is some wiggle room there, but there's also MFN rules that would mean they'd have to bring the rate down for everybody. So it's not just a matter of bilateral negotiation. So I wouldn't be looking for much different than 15%. They could do more, but it would be a big haul for China to move it anywhere other than 15%.
How much pressure do you think their economy is under right now? We were having a debate about this, and I know last week you guys were talking about this, especially in the context of what happened in terms of Apple's earnings.
Right. No, it's under a lot more pressure than what public data is currently showing right now. There's an idea that China's feeling a little bit of a push from credit and a little bit of a pressure from the trade war. No, the Chinese economy right now is under severe pressure. And what we saw as the year went by is that manufacturing was weakening more, and now it has brought down the entire economy with it, and every major sector in our data was slowing in the fourth quarter.
But are you chalking that up to the trade war, or are you chalking that up to something very different? Because when you talk about manufacturing, that relates to the rest of the world.
Right.
And that relates to the U.S. in a meaningful way.
Right. Now, there's no question that the trade war has had an effect on manufacturing. I mean, you saw that all the way back in August in our data when export orders all of a sudden just fell off a cliff because all the front loading had already been done with, and you started to see it really fall off. Now, you would have had a slowdown this year no matter what in China. But the trade war, combined with the fact the economy is slowing dramatically, combined with the fact that people are borrowing. They are borrowing, but they're not spending, and they're paying off cash flow problems, and so it's not good right now. Basically, every indicator is suggesting that they're under a lot of stress, and these things feed on each other.
We've seen in the past that they have these levers they can pull to kind of juice the economy once again. Do you expect to see that, A, and B, do you think they'll work?
Well, there's 2 aspects of that. The monetary stimulus that everyone's waiting for is already there. They have been, we've seen lending actually go up. Firms are reporting more borrowing, bankers are reporting more lending. So we're seeing more monetary stimulus. The problem is it's not feeding into the economy.
Well, it's at the same time that they're cracking down on the shadow banking system too.
You're seeing,
so is it a net increase overall, even with the cutbacks that you're seeing from shadow
earlier
banking?
in the year? It was a cut down in shadow and up in banks, and so it was hard to see where that ended up. Now we're seeing that the cutbacks in the shadow are gone, and they're ramping up at banks, and they're actually going the other way at shadow. So you are seeing, not only has deleveraging been reversed, you're seeing a full-on clandestine easing campaign.
So do they strap themselves in and ride it out and say we're not going to lose face, or do they somehow try to maintain face but make a deal? And how should we feel when we hear about China and the economy slowing? Should we say it's working, or should we say, uh-oh, that's going to be bad for us in the long term as well? How should we look at it?
Well, we shouldn't be hoping that China slows dramatically, because that'll have implications for everyone. But I think the Chinese are looking at a trade deal. If they can get this with a few tweaks to their IP enforcement, then this is a wonderful thing for China. It allows them to focus for the next year on basically securing their economy in expectation that 2020 is going to be much worse on the trade side.
And for us, it would be small, the benefits, or can we actually glean something that is a game changer for us in terms of...
We're not going to get a game changer, and the reason is that this is all about enforcement. So even if the Chinese put in a big system, if U.S. China relations decline over the next year, they get worse, then the Chinese will stop enforcing the new mechanism. So you'll see things get better so long as the U.S. China relationship gets better. But since this is not going to be a long-term trend, this is sort of a 2019 thing as opposed to a medium or long-term trend in terms of the relationship, the IP problem is not going to be solved. It's going to be, they're going to put a Band-Aid on it, and they're going to try to move on.